Good evening, ladies and gentlemen. It is Wednesday, the 23rd of November, 2022, and welcome to Hindsight, where we learn to be a better trader. We're going to take a look at 3 stocks today, and the first one's going to be CDR. Now, before I dive right into it, I've got a quick question for you guys. In the microcap space, which 2 minerals, when they get struck for rock chips, actually rally? At least in the last few months. Right? Gold can obviously rally if you dig up like 900 grams a ton for a rock chip. But what's been rallying lately? If you've been paying attention to the markets, it's lithium and trio, or rare earths. So CDR is a rare earth announcement, and it's rock chips. Now, the interesting thing is that these results are very specific, right? It's not just 3,000 parts per million for trios. They actually dig right into it and say how much dysprosium there is. I honestly don't know what that is. Terbium, neodymium, praseodymium, and niobium. Now, the important trios that move stocks is neodymium and praseodymium. You'll typically see ND, PR in an announcement combined together. And then, of course, niobium. WA1 had niobium and had about 5,000 parts per million, roughly, which is a very, very high grade. So this announcement I expected to rally, even though it's rock chip, right? We all know rock chips are dog shit. They're absolute dog shit announcements. But if the market has a strong sentiment for trios and lithium, then who am I to argue and not day trade them? It'd be silly for me not to. So I was really interested because the grades are very strong for both neodymium. I'm not too sure about praseodymium by itself, but the niobium is definitely sexy, especially when it says over detection limit. But the confusing thing for some people is that assays are still awaiting. So one might wonder, well, how are they getting these results if assays are waiting? Well, XRF is how they measure it. So the samples were typically 1 to 2 kilos, and they were measured with a handheld portable XRF. XRF is, how do I put it, kind of garbage. It's unreliable. It's not very good. It doesn't really represent what's in the actual mineral or ore, and it's used on both rock chips and the actual drill cores themselves. So I don't find them really reliable at all. I don't even know why people use them. But the point is, that's dug all the way into the announcement down the very bottom. I assume a lot of people, when they read this, don't know what the measurement was or how it was measured. So you've got a little bit of a red flag there in that these are XRF readings. However, the market cap was something like 4 or 5 million with $3 million cash. So with an EV of 2 million, this looked like a no-brainer in terms of an announcement. So we opened CDR, and the gap up was to 8 million market cap. Opened up at 19, roughly. It had 40 million shares on issue, which is super, super low. Right, that's another reason that I took it. The shares on issues are very low. And you got this weird price action. I know a couple of guys on my Discord got 19, sorry, it's down here. It got 19, sold at 20 straight away, or sold it, I think it was 20 and a half or 21 as well. For me, I just sort of let this happen, the first 2 candles. I was just chilled out, and then I started hitting out because there was clearly reload pressure. Just hit out over a couple of orders. And then rebuy, right, the retest. This is like a quadruple bottom at this point. But the point is, we've got a really nice horizontal base forming. And it's quite evident after just 3 minutes of trading. We just see what happened. This is what it looked like. I was like, okay, I'll try and grab the bottom again, trade it for a couple of ticks. And it just wasn't going anywhere. So trade for a tick, and then I think I ended up losing a tick. So overall, not that exciting of an actual trade. But what's fascinating is this price action here is very unusual. Now, this can be explained if we zoom out onto the daily. We zoom all the way out. And this stock opened up at 19 here. And the IPO price was 20 cents. And it just really hasn't gone anywhere from 20 cents in the last year and a half. So it's just a big downswing. You've got quite a few baggies in this range as well. You can tell by the volume. And of course the IPO, not much happened. And there's 40 million shares just sitting there, just devaluing over pretty much its entire year and a half. I didn't really take that into consideration because I normally don't take these into consideration that much with the shares on issue being so low. With the grades sounding so pumpy, because what's more important than reality is fantasy, right? People trade the fantasy of a stock, and in this case the fantasy is the ultra high grade neodymium, praseodymium, and neodymium, right? It's all there. It's XRF dog shit readings, but it's ultra high grade sounding stuff. So my expectation was this would pop. It didn't eventuate. However, this is where things get a little bit murky with decision making in the afternoon. Now for me, when there's really high grade lithium, even if it's a rock chip, if something sells off, there's very, 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 very few circumstances where it pushes to the upside and retests the highs. Very few circumstances where that happens, especially when it's chilling under VWAP and you've got a range break in the morning that's so strong and high volumes, and it just kind of grinds down, stays below this VWAP target here all day long. It's ugly. In this one, I probably should have started building a position earlier, but ultimately I was waiting for the 16 break, which is this level here and this level here, and just waiting for the break to the upside. Or I wanted to see volumes. Volumes kicked in. I joined the momentum, got I can't remember if it was 16 or 16 and a half, but ultimately didn't make much. Then I think it was maybe a tick on this one. It just didn't go anywhere. It chilled around here for a while and then just started flopping. And then there was a couple of rug pulls as well, a couple of high volume sells, and CHN doesn't show up on this chart, but there was a couple of decent CHN sells as well. So in hindsight, I'm thinking just due to the nature of the commodity and the grades that were there, I'm not entirely sure if I should have started building a position earlier. The safer play, absolutely the safer play, was waiting for volumes to come in and to break above this level, and which is what I did, and ultimately didn't really pan out the way I wanted. I'm thinking if I should have anticipated it. This is something I discussed early in the morning. Like once it started breaking down around here, this one thing I was talking about on voice chat was, this thing's gonna fucking probably go in the afternoon. Like when I say when it goes, I'm expecting it to dump, consolidate for a while, and then shoot off and retest the highs back to this 20 zone. And once it's sold off, you know, I was thinking, where are these volumes coming from? Is there a cap raise? It's like, oh no, this thing's just sunk for a year and a half on an IPO at 20 cents. So that's where all the supply came from. No cap raise that I'm aware of. So that kind of sucks. But it is what it is. It's a rare circumstance where, you know, you've got rock chips that are XRF, because who the fuck does XRF readings on a fucking rock chip? Normally it's just assays. They actually go get the assays from the lab and then report the rock chips that way. That's going to be far more reliable than XRF. No one wants fucking XRF readings. But the good thing was XRF wasn't really mentioned until the very end of the fucking document, which no one read. But it is what it is. I probably should have trusted my instinct, which was right at the beginning. Once the range broke, just prepare for the afternoon session because it's going to go. Albeit I was wrong in the strength of the buying. Obviously it went from, you know, this double bottom here effectively at 14 or 13 and a half. That's a nice move, 13 and a half, even 14 if, you know, sitting on the bid with a decent 100k order or something like that. Going from 14 to 16 ain't too bad. It's something. Or 16 and a half, or even 17, but you know, to VWAP. I probably would have not gotten to this zone here as it was starting to come down. I probably would have sold out anyway in hindsight, because again, you know, this setup when it goes is meant to actually go. It's not meant to sort of flounder around sideways, and especially not start making lower highs and lower lows. So that's the sort of thinking behind that one. I think there's a few lessons there in terms of strength of the type of commodity that it is and the potential for afternoon rallies, particularly when it sells off. And of course, just paying attention to where supply comes from. Is it because the shares on issue are so high? It's like, of course not. In this circumstance, got 40 mil SOI. It's because the IPO was at 20 cents, most likely, and that's just where all the supplies come from. We're going to move on to MMC. Now, this one was a lithium-based acquisition announcement. So we scroll down and we can see the grades here. You know, it's got a bunch of 1%ers, 1.17, 1.11, whatever. It's not overly exciting, but again, it's lithium. Lithium stonks, and the market cap for this one was, okay, it closed 22 cents at 7.5 mil. So it jumped quite reasonably from 17 cents. And with lithium, you know, it usually doesn't have a problem getting to 15 to 20 mil market cap, even for fucking rock chips or lithium land acquisition. This one didn't particularly strike my fancy as something to be extremely good or A+ or anything like that, by no means. But the price action was very interesting right as it opened. So it opened up at around 10:40. So the announcement came out at around 10:20 in the morning, so after the morning session. And then massive volumes come in and just sell this thing off, which kind of makes it peculiar. Now, I paid attention to this thing around here when it was 21.5, and I started adding onto my position, started building a position rather, in anticipation that it sort of breaks this 22 level and doesn't go back below 20. And it was on the back of the fact that it's lithium, acquisition, whatever, market cap was low. And one thing I didn't realize until later on in the trade was that it actually had another announcement in the morning at like 9 o'clock, and that was a cap raise. So when I found that out, I started hitting out before this 23, so it was like a trade for a tick, effectively, 1 or 2 ticks. So it got out, all out by 22.5, and sorry, it might have been 23. I actually don't remember. The point isn't necessarily the entry and exit, it's the decision making behind the trade. So MTC, if we go back, we can see in the early morning there was actually a reinstatement to quotation, and that is a proposed issue of securities, which means cap raise. So what we have is a bunch of options, which I don't really care about too much. It's the ordinary shares that I care about. So 8.9 million shares. You scroll down, and I really hate this new document. The old Appendix 3B was just a lot easier to read. So we have 14 cents cap raise, right? 14 cents, and it's pushing up to 22, 22.5, 23. And that was the decision for me to just go, no, this is not happening. It starts pushing a little bit, it breaks a couple of walls to the upside, but ultimately the ranking system in terms of significance is, well, cap raise just dominates, right? If there's a cap raise, there's just so much gravity associated with a micro cap stock. You announce news and then a cap raise, or cap raise and then news, it doesn't matter which order, or both at the same time. The vast majority of the time, there's just so much gravity on the stock that it just comes off. Doesn't matter how good the announcement sounds, unless it really is spectacular stuff. Like, let's say you're hitting, I don't know, 100 grams a ton of gold and you've got a bunch of 20-meter strikes. Yeah, the thing's going to fucking blow off, even if there is a cap raise at 5 cents, right? The news is just so significant. But in this case, news isn't that significant. I'm sure it's lithium, it's an acquisition, whatever, but too much weight behind it, so it sort of pulls back. Gravity kicks in, and I sort of don't want to be a part of that. And you can kind of tell early on as well, because this kind of raised my eyebrows, is, you know, what the fuck's going on there just as it opens? You know, 3 minutes of just insane selling. Just like, that's not normal. So kind of an eyebrow raiser there. Next we have Chalice Mining, CHN. This is one that I didn't actually trade, but there was a plan on this one about being a short after it sort of does a pop. And whether it does a rally or not doesn't matter. It's just a fade play. So CHN, the idea was behind the fact that it's got some, you know, nice hits of 3E, which is PGM. We've got 157 meters at 1.7 grams, which is quite nice, or in this case, outstanding wide high-grade hits. So it's high-grade, it's nice, but CHN is a $1.7 billion company. So just when a company hits this $1 billion plus range, it takes something pretty fucking special to move the market cap from 1.7 billion to 1.9, which is effectively where this one got to, just under 2 billion market cap. And really the trade is, once it came off here, and almost as if that's treated like a retest as well. So once it came off, the idea is to get the trade as it comes back to this level, kind of the same way we do a range break to the downside. It retests this level, that's going to be a short, and then it goes down. Same sort of thinking is it range breaks to the upside. Now, I don't take the upside trade because I've got a plan in mind. My plan isn't just, I don't just throw it out the window and go, you know what, I'm just going to go long because this chart setup looks long now. Like, no. The plan is there based on the news and based on the market cap, the big gap associated with it. You know, if this stock opened up somewhere around here and then does this chart setup, or rather this chart setup where it pops to the upside, except it does it down here. Yeah, that's a long every day of the week. But the gap up is so significant at the $5 level as well. So round number, it's gapped up, what, from $4.65 to $5. It's too big. It's too big of a gap up on news that you'd want to see on a micro cap, ultimately. So for me, it's waiting for the fade, but I was a little bit preoccupied. So it's all well and good in hindsight to talk about what I should have done. And the add-on point, of course, is, you know, so you got your short here, and then as it breaks again, there's going to be another short there, and then just let it ride to the downside. Something on this, I probably would have rode it a little bit longer than I'd expect. I kind of wouldn't want to see it go back above this pivot here. So as it comes, I'd want to see it come down, and then as it comes back up, I'd definitely be all out in this area here. There's no reason to close out any sooner. You know, as it comes up here, it's like, that's pretty normal. Pops up a little bit here on no volumes. It's like, that's also relatively normal. And then this high volume candle here, you can see it just sells off, and it's just like, oh, okay, we're correcting to the downside. You know, this is just a little bit of a fake out to the upside on low volume, but what ends up happening is we're back up, and it's on good volumes too, reasonably good volumes. So this would have been the sort of stop out target. So, you know, there wouldn't have been too much profit there, but the point is that was the trade. That was the plan effectively, but I did end up focusing on too many stocks today. There was too much to watch, but this was definitely one on the for me to plan out for the day, but I just didn't eventuate, unfortunately. So that's it for today. I hope you guys learned something. If you did, please leave a thumbs up and subscribe. And that's it from me, guys. I'll catch you in the next video. Cheers.